You just didn't have that quality of content back then. And it was probably a podcast with Pomp in October 2018. I listened to this podcast and it was just, for me, that was the final moment where it all just suddenly made sense. And I was like, okay, I do not own enough Bitcoin. I need to buy as much Bitcoin as I possibly can. It was 6,000 at the time, and I woke up Saturday morning and started funding my Bitstamp exchange account, which I'd been mucking around with. And then a month later, it dropped to 3,000. So then I was like, okay, I just need to borrow money at this stage. Our co-founders include Adam Back, who is obviously well known to everyone watching. We very quickly became friends. We had dinner together, and there were about 30 of us at the dinner, and I sat opposite. We ended up speaking nonstop for 3 hours about Bitcoin treasury companies. Everybody else just ended up leaving, and we were just sat there in the restaurant, having bored everybody around us. We spent a lot of time talking about different designs and products that could be implemented in the companies that we're involved with together.
Hey everybody, Tyler here, and today on Treasury Orange, I'm talking with Richard Byworth. Richard is chairman at Future, a Swiss Bitcoin treasury company. He has an extensive background in traditional finance, in hedge funds, and trading. Richard is also an advisor to Jan3, a Bitcoin native company helping nation states consider Bitcoin adoption. Richard is a board member at Relay, a Swiss Bitcoin DCA app platform, and he is a regular podcast guest speaking about Bitcoin treasury companies. Richard, welcome to the show.
Thank you, Tyler. Very, very happy to be here.
Great. So Richard, first off, can you introduce our audience to yourself and your background in finance and investing? And what made you view Bitcoin as an asset worth investing in? Well, I think a lot of your traditional finance contemporaries don't yet view Bitcoin as that asset.
Yeah, I think maybe I'll start there. I mean, like when you sit in traditional finance, the idea of native internet money being the best store of value that humanity has ever seen is quite a large step for you to be able to take, given your whole framework of the world and the success that you've seen in that world is based on the traditional financial system. And so as a result, I find, and the other thing I would add is that generally people in finance, that there are many things that you need to be able to cover to fully understand the broad financial picture. And I would say a lot of people in finance are sort of, in English, we say blagging their way along, not necessarily knowing everything, but, you know, if someone challenges them, then they just speak a lot and sort of keep trying to drown out questions. Rather than themselves ask questions to try and dive deeper. So the natural instinct for a lot of people in finance that are kind of hiding from being found out to, you know, having a little bit of imposter syndrome perhaps, means that they just aren't well equipped to ask questions and to really explore what Bitcoin has to offer. And indeed, you know, I was in Tokyo when I first heard about Bitcoin. I was running a desk there for Nomura, the Japanese investment bank, and one of the young kids on my desk was started talking about Bitcoin. And, you know, he was saying, oh, this is an amazing, blah, 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 this thing on the internet. And I don't know if you think back to 2010, 2011, but like anything on the internet was not trusted. Credit card, you know, certainly my generation, the idea, and my parents' generation, the idea of putting your credit card details into a website was extremely frightening and something that you just didn't do. And there were plenty of stories of people, you know, putting their credit card details into some website and getting their money stolen. And I think the biggest use case back then was basically porn and porn sites. And so if you were fortunate enough not to have to live in that world, then you didn't really ever think about putting your credit card details into the internet. But he kept going on about it. I was quite frustrated and irritated because he was a bit of a lazy sales guy. I was running a sales team. And so I was just like, look, just get on the phone and speak to your clients. Stop talking about this scam on the internet. And so my initial reaction to it always was, is a scam on the internet. And I think certainly a lot of people, as I said, my sort of generation and parents' generation, certainly at that time would have had the same reaction. And it was only in 2017 when I read the book Sapiens, where, obviously that's a fairly frightening and dystopian book about what the future of humanity is going to look like with the advent of AI and all of this. But, I agreed with a lot of what he was seeing for the future, and where he was drawing parallels to our history and what happened. But he kept talking about blockchain and Bitcoin. And I was like, why is this guy, who's clearly been very thoughtful in putting this book together, why is he talking about this scam on the internet? So I had some time. My kids were getting old enough that I didn't have to be with them the whole time. And I decided, for the first time in 7 years after having kids, I could read a book. So I obviously started with Sapiens, but then I went on to read the white paper and started really exploring Bitcoin. And even back then, this was 2017, it was quite hard to get access to materials. There certainly wasn't like the Saylor series on the What is Money podcast to give you sort of that deep, immersive approach. Or even, one podcast I often recommend is Safe Dean's Lex Friedman interview, where I think it's almost 4 hours, where he goes into every aspect of Bitcoin. You just didn't have that quality of content back then. And it was probably a podcast with Pomp, where he was interviewing Murad, who has now become a bit of a shitcoiner. That was in October 2018. I listened to this podcast, and it was just, for me, that was the final moment where it all just suddenly made sense. And I was like, okay, I do not own enough Bitcoin. I need to buy as much Bitcoin as I possibly can. I remember it was 6,000 at the time, and I woke up Saturday morning and started funding my Bitstamp exchange account, which I'd been mucking around with, and started buying Bitcoin. And then a month later, it dropped to 3,000. And so then I was like, okay, I just need to borrow money at this stage to buy Bitcoin. Unfortunately, never enough. Certainly made some mistakes along the way with some leverage trading, which I always recommend people not to do now. But yeah, that was sort of my journey into Bitcoin.
Interesting. You mentioned you working with the annoying Bitcoiner in your office around 2010, 2011. And I kind of was that guy in the bank that I worked for. I was in commercial lending, and I was kind of the guy talking about Bitcoin, but I hadn't even really done the full deep dive, like you said. I was primed to understand Bitcoin, but I kind of fell victim to trading it. I saw it as a meme at first before I really understood the fundamentals and the value proposition of Bitcoin. It took me several years of trading it to finally get there. Now, I think a lot of Wall Street and institutional types are primed to understand Bitcoin, Richard, in that they understand the debasement trade, right? They understand to seek out assets that are just going to outperform the dollar and other fiat currencies over time. Why do you think it's so hard for traditional finance types to make that final leap to Bitcoin? Is it there's not enough education out there? Is it just a long process?
I think, I have two very, very successful hedge fund managers as very close friends of mine. And you'd think that being friends with someone like me, who is talking about Bitcoin all day long, would probably get them to the point of saying, maybe I need to understand what this thing is. What I find is that they are always doing 1,000 different things and going deep into something like Bitcoin, where you really have to dedicate so much time to understanding. First of all, the thing I didn't understand about Bitcoin, which got me, first interested in it, was that there are only 21 million. Now, I think most people now understand this, but understanding why there will only ever be 21 million, why Satoshi can't come back and print a load of Bitcoin, why, governments aren't going to ban it. All of these things take time for you to understand around the network, how the network works, how decentralization works. how, nodes are essentially the final arbiters of what is the Bitcoin blockchain. And all of these things, it takes time to get actual comfort with that. So I can tell them till I'm blue in the face, look, there's scarcity, divisibility, portability, durability, verifiability, fungibility, all these things. But until you understand that, you can't realistically say, okay, I'm going to put a significant amount of my capital to work in this. And for both of them, they consider this as a liquidity trade. For them, they look at this as a NASDAQ proxy. They are slowly getting to the point of saying, okay, maybe it is something different. But it just takes a lot of time. For them, they always will look at everything as a trade, right? And you said the debasement trade. Like, that is the trade that Wall Street is looking at the moment, right? So Bitcoin is the underperformer against gold currently. So, that probably means Bitcoin is inferior in their minds because the market is right. The market is always right. The market is efficient, right? So that's the way that these sort of people will always think about things. So for them, market signal tells them everything until Bitcoin breaks correlation with NASDAQ or massively outperforms gold. They'll be just sitting there going, yeah, it's just a NASDAQ proxy, or it's a lesser version of gold. That's the problem that I deal with as an educator in the space. You mentioned a few of the things that I'm involved with at the beginning. So obviously, you think about Bitcoin Treasury. For me, that's really starting to help those trader mindsets think about the fact that a Bitcoin Treasury Company is an ETF with a hedge fund bolted on top of it. And so then they can start to equate that to the world that they understand. And that's the way that I explain it to traditional finance people, because otherwise they're like, well, it's just an ETF. Well, no, it's not. It's an ETF that can trade around inefficiencies in its own pricing. And then, obviously that's the way that I'm sort of channeling my focus to orange pill the institutions and Wall Street. With Jan 3, my focus there is obviously trying to help nation state adoption, which can help poorer countries and help, support their people for a brighter future. And then, of course, with Relay, that's much more at an individual level. I just went and got a haircut. How does your hairdresser get access to Bitcoin? Well, on board with Relay, you can start trading 10, 20 Swiss francs a day or week or a month, whatever you want. So each of those three channels I'm looking at for propagating broader Bitcoin adoption.
That's cool. I have a lot of those great long form conversations with my barber as well. And we talk about ways they can DCA. So, Richard, you're managing the launch of Future, which is a Swiss based Bitcoin treasury company. You raised, correct me if I have the numbers wrong, 28 million Swiss francs. That's over 30 million US dollars to do that. So, that's not a sentence we'd have heard 5 years ago, right? Before strategy came on the scene, MicroStrategy formerly with Michael Saylor. What can you tell us about the team that you've built and what you guys are hoping to accomplish?
So yeah, look, we haven't yet listed, so we're in the sort of pre-IPO phase. The team is a really solid, broad team. So obviously, myself with the financial engineering component, Mark sees my partner from our previous firm is the vice chair. He's a private equity specialist. So the idea with his focus is going to be to bring on an operating business to obviously make sure that we've got steady cash flows to be supporting the purchase of Bitcoin through difficult environments like we're living through at the moment. Our CEO is a chap called Sebastian Hess, who's a serial entrepreneur here in Switzerland, previously backed by Founders Fund in his firm Block Green, where he built one of the first hash rate derivatives firms for Bitcoin miners to be able to hedge out their compute. And then we have an operational team around him. But the rest of the board that we're going to be adding at listing are Vijay Salvan, Bitcoiner who wrote the book Principles of Bitcoin. He's a lawyer. Tina Baker-Taylor, she's also a Bitcoiner, but a compliance specialist. So she was brought into Binance UK to fix their problems they were having with the FCA. And then the final board member is a gentleman called Richard Petty, who I worked with in my firm prior to Seize Capital, who is exceptional board member and auditor, and will be chairing the audit committee for the firm as well. Some of our co-founders include Adam Back, who is obviously well known to everyone watching, I'm sure. And then Julian Leininger, who's the CEO of RelayApp, the company I sit on the board of, one of the most recognized Bitcoiners in Switzerland. And then we have a secret weapon, an advisor called Donald Ewer, who previously ran portfolios in credit for hedge funds like Citadel and Caxton. So the plan there is that Donald will be able to help us develop the fixed income products in a similar way, obviously, to what Strategy has done, but make them very compatible with Swiss taxation optimization to really profit from the backdrop in Switzerland of a zero interest rate environment, which is probably one of the reasons why everybody wants to see a Swiss Bitcoin Treasury Company pop up, because we have zero rates at the base rate level from the Swiss National Bank.
Wow, that sounds like a really cool team, and I'm anxious to dig in more into some of the backgrounds of the people you mentioned. To see someone, with your finance background, and Adam Back, obviously, whose Bitcoin bona fides are, unparalleled. I think that's really exciting to have him as part of the team too, I'm sure. What's it been like working with Adam, and how can you complement each other?
Well, I mean, I can only compliment Adam. He came on the Bitcoin Treasury show that I was hosting for specifically for Bitcoin Treasuries a couple of months ago to talk about BSTR. But we only first met in Vegas this year, which I think was in June. I can't actually remember which month.
May, I believe.
Was it May? Okay. So yeah, we were together in May. It was quite funny. He came up to me and shook my hand. He was like, "Oh, Rich Byworth." I was like, "Wow, Adam Back knows my name." And yeah, but we very quickly became friends. We had dinner together, and there were about 30 of us at the dinner, and I was sat opposite Adam. We ended up speaking nonstop for 3 hours about Bitcoin treasury companies. Everybody else just ended up leaving, and we were just sat there in the restaurant, the two of us, having bored everybody around us. But yeah, he's obviously as focused on it as I am. We spend a lot of time talking about different designs and products that could be implemented in the companies that we're involved with together. But yeah, he's fantastic, of course.
Really cool. I would have loved to have been a fly on the wall for that dinner conversation for sure. So you mentioned that Switzerland has essentially a zero interest rate environment. We've got a large US-based audience, Richard. Can you tell us more about that and get us up to speed what the interest rate environment is and how the Swiss central bank is positioned currently?
So Switzerland has a problem, and that is that it sits in the EU and has run its economy very efficiently, whereas the rest of the EU is obviously drowning in debt and has a number of issues around the various economies that are scattered around Switzerland. Actually, if you look at obviously France and Germany and even Spain and Italy, it would be the other way around a few years ago, but Germany seems to be sabotaging themselves very significantly. So to remain competitive as an exporter, Switzerland has to make sure that the currency doesn't get too strong. And so what they've been trying to do is keep it sort of semi-pegged. They removed the peg to the euro a few years back, but semi-pegged to the euro so it doesn't strengthen too much, because what's happening is you're seeing a lot of Arab money, a lot of European wealthy family money coming into Switzerland to escape the debasement of the euro and just sit in Swiss francs, right? So that's pushing the strength of the Swiss franc higher, obviously. And so the Swiss National Bank just keeps dropping rates to try and remain competitive with their currency so people don't want to hold Swiss francs. It's not really working. So they're all the way back at zero after rising from negative interest rates post-COVID. And I do think that we'll get to a negative interest rate environment fairly soon in Switzerland again, because this is just not stopping. And everybody sees, within the fiat currency domain, everybody sees Swiss franc as the safe haven. So yeah, that's largely what's driven it. They cut rates to zero probably 2 months ago. I think it was in September. And yeah, now we're in a situation where I think they're going to possibly have to cut further, which means all the pension money that has to allocate to bonds in Switzerland is basically earning zero. I think the 10-year bond, the government bond, is trading at 12 basis points. So imagine looking at money for 10 years to get 12 basis points on your money. It's just insanity. So there, this is the dynamic. And so we feel that Switzerland is a very well-primed market to be able to support Bitcoin Kager-backed fixed income products. And, just seen Metaplanet issue 5% coupon prefs in their first IPO. And I think Switzerland could be even lower than that. I mean, obviously Japan base rates of 1.7 thereabouts, I think, in the 10-year, 1.8. So you could imagine that Swiss rates with a good credit could come at 3, 4, 5% and be very, very compelling for the 600 billion that is trying to find yield in Swiss francs.
That's quite the conundrum. And here in the US, as you know, we're pivoting away from quantitative tightening into probably balance sheet expansion over the next year. There's some political appointments at the Fed that are going to be coming up. And I think the Fed's probably going to turn more dovish, and that's probably going to put even more pressure on Europe and Switzerland to drive those yields lower. So do you view future and Bitcoin treasury companies largely as a way to kind of, I'd say, maybe backdoor orange pill institutions by stripping away some of Bitcoin's volatility? Is that a way you see as attacking those fixed income yield seekers in Switzerland?
Yeah, I think definitely this is a way to rouse the 300 trillion bond market monster into a focus on Bitcoin. As you say, by reduction of volatility, and just use the Kager of Bitcoin to be able to arbitrage the interest rate environment. So definitely, I would say that what Saylor did with STRE, the European one that he just launched,
Right, stream.
I think a lot of people looked at the pricing there and they were like, he's crazy. I actually think it was super smart, because what does it do? It wakes everybody up to the fact that this company can suddenly afford to pay way over base rates in Europe, way over what a credit like his could pay. And so suddenly they're all paying attention. And of course, the rates will normalize and go to a more inline level as people buy the preference shares, but that then opens the door for him to issue even more. I think what he's done is super smart. He won't just stop at Europe. There's talk of obviously Canada, UK, potentially even Switzerland. Switzerland is a slightly hard market to access just because of regulatory scrutiny, which is why, obviously the team we put together, we focused very much on having strong governance in what we did with the board. And I think that's a really important aspect of building the right way in a country like this. There's no doubting Saylor will eventually come to Switzerland. It's too compelling. I think that will help us, because it will make people realize, okay, actually, Bitcoin is sensible collateral to be using in your fixed income rate products. Yeah, so I'm pretty excited about how all of these companies moving together will help propagate broader adoption continuously into that institutional space.
As am I. So obviously, over the last year, we've seen a pivot from Michael Saylor's strategy from convertible debt issuance, which I know you have a background in, to those preferential shares, the preferred equities. Do you think that was an inevitable move? Do you think it was, a real innovation by Saylor? And how do you broadly view that as the main funding source to fuel the leverage for Bitcoin treasury companies moving forward?
Yeah, I think Saylor's of a size now where he really can leverage the collateral without being too meaningful in terms of the ask of collateral against the preference shares. So I think, I forgot what the number was, but he posted how much runway he has in coupon payments if Bitcoin doesn't move from here was something like 70 or 80 years.
Yeah, close to a century.
Yeah. So, I mean, if you don't think Bitcoin's going up in the next century, you shouldn't probably be involved in the space. But yeah, I think it just shows you where he's managed to optimize the company's balance sheet too. I think convertible bonds were useful for him in the early days, but he learned the lesson that, comes with converts, that pricing can sometimes be a bit inefficient and you create a natural short seller in your stock. He obviously wanted to make sure that there are no short sellers in the stock, and the only person selling stock is going to be him in the common ATM. Obviously, at some point you get attacked by short sellers. And I think it's been very interesting to watch the amount of funding that's been given to short sellers for strategy. I don't know if you've ever spoken to Grain of Salt, but
Mike. Yes.
Mike, exactly. He talks about this a lot. The fact that the funding provided is infinite leverage, essentially, for institutions to take on a short with MicroStrategy versus Bitcoin. So it was definitely something that felt a bit fishy about the financial system and their rebellion against Bitcoin treasury companies. Obviously, we've now observed everything that's happening with JP Morgan and what feels like a very targeted attack on strategy as well. So yeah, I think we're definitely in the and then they fight you stage of the institutional adoption. But that was always expected, right?
Totally. I have to cop to providing some borrow on some of those shares. I'm just a small fish. Don't blame me. I was looking for yield on my shares. But
Why not? Exactly.
yeah, it was interesting. Jim Chanos was kind of the face of the short selling in strategy shares as he was criticizing the elevated mNAV in strategy. So he was doing kind of a long Bitcoin allegedly in short strategy trade. And I'm sure there were a lot of people behind the scenes. Obviously, the recent price action has been really bearish at the same time that Bitcoin's prices retraced, 35% roughly from its all-time highs. How do you view the landscape? Is this sentiment something that's going to be short-lived? Is it just so tied to Bitcoin's price action that we just kind of have to live with this as someone who's managing a Bitcoin treasury company? How do you prepare yourself for these types of situations when there is maybe poor sentiment in the space, or there's been massive short positions, or the macro environment, is maybe not favorable, and Bitcoin's prices retrace? How do you view all that comprehensively in the Bitcoin treasury world?
As I said, a Bitcoin treasury company is a hedge fund sitting on top of an ETF, essentially. And I think there's been a certain amount of religious zealotry around the idea of selling Bitcoin as a Bitcoin treasury company. Let's not forget what a treasury is. A treasury is essentially a capital pool to be used in an environment where the company needs it. And I would say that if you have an opportunity to buy Bitcoin at a 20, 30% discount, like we look at H100, I think it's trading at a 20% discount to its NAV today, right? You should sell some Bitcoin and buy back your shares, because essentially what you're doing is you're buying Bitcoin at a 20% discount. So that means that it's accretive on a Bitcoin per share level to your investors. And an environment like this, where sentiment is low, is a perfect opportunity for you to just keep accreting more Bitcoin per share for your shareholders, like you would do in an environment where we go back to 5-10 times mNAVs for a smaller company, or maybe a 4 times mNAV for a strategy or a Metaplanet. You would expect them to be selling shares to buy more Bitcoin. It's the same, but just the other way around. And I think we've seen a lot of religious zealotry around, you never sell your Bitcoin. It's like, sure, but I want more Bitcoin per share because I'm invested in a Bitcoin treasury company. So that's number one. I would say that we need to move away a little bit from the religious zealotry that has been witnessed in this space. Second thing is, I think more and more operational businesses or businesses that can leverage the Bitcoin collateral. So obviously Saylor's done that with preference shares, but there's also other ways to put the Bitcoin to work, right? You could essentially become a Bitcoin bank, start a lending strategy around it where you're getting a return on the Bitcoin, where you're giving out Bitcoin for over collateralized loans to market makers, for example, where you can get reliable returns on Bitcoin. Now, it's hard to get into some of those contracts. The fund that I was previously running is a fund that generates yield on Bitcoin through hedge fund strategies. And so that's also another way that you could essentially implement strategies around Bitcoin to grow that Bitcoin stack. One of the things that I think isn't adopted enough by other Bitcoin treasury companies is something that Simon's been doing with Metaplanet for some time, is put underwriting. So essentially selling puts against your purchases that are coming of Bitcoin. You know you're going to keep buying Bitcoin. So sell some puts, generate some premium, and then use the money coming in to either have those puts exercised to you or just buy the Bitcoin and get some extra Bitcoin from the premium that's generated. Now, Simon always does it with cash, but I think actually you could do it with Bitcoin, because that would mean essentially, imagine we've got just over 300 Bitcoin at future. So you'd say, okay, we're going to do 30 Bitcoin collateral of put underwriting. When we go to market, as in we're listed, we have an ATM. Even if the ATM is running at 1 times mNAV, so you're selling stock at 1 times mNAV, because you've sold puts and the cash being generated by the ATM is actually essentially creating premium on your mNAV because you're getting that extra premium for free in the Bitcoin. So, obviously all these different environments, there are things you can do. I would say also to 1 times mNAV, using Bitcoin denominated convertible bonds is a savvy way to obviously have a premium on the stock that you're selling. So there are multiple ways to use the different tools that have been employed across the industry in any of these environments to keep accreting more Bitcoin. And I think, as I said, sort of leaning into a bit more of an operational business side, using the Bitcoin as collateral, or actually having a business that correlates very well with it. I'm joining a UK company as an advisor called Connecting Excellence. They're a headhunting firm. And so they have a very nice business that actually accretes value to the Bitcoin treasury. But also, if you think about what a headhunting business is, it's a very hard business to go out and acquire another headhunter, because if you buy the company, your risk is that all the employees leave and then you're just left with an empty shell. But if you're operating on a Bitcoin treasury where the employees understand I've got, options in that company, and the more performance I do, the more Bitcoin we can buy, the more accretive it is to me as an employee. This guy, Scott, who runs the company, can go out and hire all the best headhunters in his area rather than go out and acquire their companies, right? So it's a business that accretes value even more from having a Bitcoin treasury to actually be able to compound that Bitcoin treasury even faster. So yeah, he's going to hopefully be listing in the UK at the end of this year.
That's cool. That's an interesting strategy. The way you kind of framed a Bitcoin treasury company as a hedge fund, I think is an interesting framing that we don't hear a lot here in the US. And certainly Michael Saylor's kind of been criticized as being a hedge fund, which I don't know how closely you followed the MSCI, the Morgan Stanley indices that are considering excluding strategies from some of these global indices that they've already been added to, and they want to prevent future Bitcoin treasury companies who hold 50% or more of their basically a net asset value in Bitcoin from being added to these indices. So, I think it may be a little bit of an overblown issue. I think more importantly is S&P 500 inclusion or the NASDAQ 100 inclusion. That's a strong passive bid. And there'll probably be a fight over that, in the coming years as well. But I've seen Michael Saylor kind of push back against that hedge fund narrative. But then you've seen companies like Strive here who have kind of embraced it. They started off saying that they were going to do a Bitcoin alpha strategy in the biotech space and acquire companies in the biotech space, but they got so large. I was talking with Matt Cole on the podcast, their CEO, and he said they got so large that pursuing that strategy isn't really accretive to them. So they are going the preferred equity route and just sticking with one preferred equity. So I wonder is it a regulatory difference? How do you view that in the global marketplace of companies doing a lot of different things with Bitcoin as their capital asset, Richard?
Yeah, look, I want to be clear. I use the hedge fund analogy to help traditional finance people understand what a Bitcoin treasury company is.
Yeah,
Um, you know, you have to be able to speak in the language of the person that you're speaking to help them understand what it is that you're talking about. These are essentially leveraging to release the pent-up pressure of the fiat system into Bitcoin. I often describe Bitcoin treasury companies as the release valve of the fiat Ponzi, where you've seen interest rates go to zero or go to very minimal levels. You would never, in a real market, lend money at zero. You just wouldn't do it. So obviously the market is being manipulated. And as a result, the Bitcoin treasury companies that are showing the truth of what real markets look like are unraveling all of this Ponzi, which again comes back to the point. If you're running the Ponzi like JP Morgan and others, you really don't want the Ponzi unraveled. So, Bitcoin treasury companies are a threat. And so this is probably why we're seeing a decent amount of attacks now.
definitely agreed, Richard. I know throughout your career, especially recently, you've talked not only with institutional investors, but high net worth individuals, people with family offices. How do you speak with them? What's their language in understanding Bitcoin as a part of their portfolio construction?
Yeah, I mean, family offices, they're all about preservation of capital for the next generations, right? So I would say that their understanding of Bitcoin is generally more advanced than a hedge fund or an asset manager. Family offices are, they're always exploring different ways to have preservation of capital. And of course, you've also within family offices often got a generational change coming through where younger members of the family are coming up and wanting to have their influence on the portfolio and the family office team. And so, they're pushing for Bitcoin. Often we do see family offices wanting to explore crypto. I think what I always find, which is quite interesting about Switzerland, is because Switzerland was the early home of a lot of the ICO projects, people in Switzerland made so much money out of the crypto shitcoinery that they haven't quite understood the whole scam of crypto because they've made so much money out of it. And so you'll often speak to a family office and they'll say, oh yeah, we've got the 3 blue chip cryptos. And I'm like, what are the 3 blue chip cryptos? And they'll say, oh, well, we're a third Bitcoin, a third Ethereum, and a third Solana. And I'm like, you could lose all your money with Ethereum. Like, I mean, it is like a failing in real time project. Solana goes down every couple of hours or couple of months, I'd say, to be a bit more generous. But yeah, these are not, I mean, they're nothing compared to Bitcoin. I mean, Bitcoin is, such an established network. It's so close to ossification and, those things are still startup projects, right? Of course, Solana with the whole meme coin thing, they got a lot of traction, and Ethereum that is, always getting people's attention. But I mean, realistically, when you look at these things on a valuation basis, the valuation makes absolutely no sense. I mean, last time I looked at the maths, I worked out that Ethereum could fall 99% before it was looking as overvalued as Amazon and Apple in the Mag 7. So that is not compelling. And these are the things that I do try to explain to these family offices, that sure, if you want to have a crypto portfolio, have a crypto portfolio, but Bitcoin is in the same bucket as wealth preservation.
Really interesting. And I think just to kind of cap that off, Satoshi's real biggest gift, aside from all these shit coins, is that he didn't stay on as a CEO, because Bitcoin can't and doesn't have a CEO. So I think that's a great place to kind of cap that, Richard. Where can the Treasury Orange audience follow your work and future and all the opportunities you have?
Yeah, so the X page for future is future hodlings, future underscore hodlings. And then I have my own X profile at Richard Byworth, all one word, where they can follow me.
Awesome. We'll put all that in the description and show notes, Richard. And one thing we have all our guests say before they leave is stay orange.
Stay orange. Love it.
All right, ladies and gentlemen, the man doing phenomenal work behind the scenes and in front of the scenes, educating institutions and bringing a hedge fund built on top of the future of money that is Bitcoin, Richard Byworth.
Thanks, Tyler. Thanks for having me.